Hey everybody, welcome back to Final Trade and another chat at the Disaster Desk. There's this idea that I've noticed over many, many years in investing, and I call it price drive sentiment. And when you think about the price of something, let's take for example Boeing stock is a good one. So they had some planes crash back in about 2018, 2019. Their stock dove real hard. Then you had COVID in 2020, and the airline industry stopped using airplanes. Um, and they have a whole lot of trouble as a company, and so their stock price went way, way, way down. And what you started to see when you would read an article about Boeing is that people would say things like, oh, Boeing's done. They're never coming back. They're a worthless company. They'll be broken up. They're going to go bankrupt, whatever. And when you thought about it, you thought, well, eventually people will fly again. Who knew how long it might be at the time in 2020? Eventually, the 747 MAX would get certified. Eventually, uh, companies would order planes, airlines would order planes. Boeing has a lot of other products. They build a lot of helicopters. They build the F-18, and you know there was always this realization that I would have when I would read these very negative comments that they were exaggerating. But I always felt that the people who made the comments believed it. And it's just another small example of this idea that I've had and thing that I've seen for so long. Price drives the sentiment. And so once the Boeing stock got beaten way down to these low levels compared to what it had been at, say, in 2018 or so, prior to their planes crashing, people started to take this attitude that the stock price determined that the company was finished. And ideally, it should be the other way. You should look at the realities of the company and determine what you think the stock price should be. But I feel like too many people, when it comes to investing, they look at the price of something and they use that to decide what they think the health of the company is, or in the collectible world, what they think the long-term desirability of an item is, or the long-term rarity is, or something like that. And I think it's unfortunate because people miss out on a lot of opportunity. They'll look at something like that Boeing stock, and when it was beaten down real bad in 2020, that was the best time to buy it. Not wait until it recovers in 21 and 22 eventually, and once air travel gets back to normal and airlines start buying planes again and everything. That's not really the time to buy it once it's doubled or tripled off of its 2020 lows. But that's what people will do. And again, you'll see that company after company in the TCG world. You'll see it. Reserve list is done. Old boxes are done. Flesh and blood is done. The prices of Monarch Unlimited go from what 600, or sorry, Monarch First Edition go from like 600 a box down to like 250 or something. And suddenly people say, well, it's a terrible investment now that it's $250. And it's really hard as an investor to get past that, to look at something and say, you know what, it's really beaten down. This is the time that I need to be buying a bunch of it. And it's taken me a lot of years as an investor to get to the point where I can I can confidently do that. And one weird old trick that I use to do that is that I will look at the asset, or I'll look at, say it's some reserve list card I want, or it's shares of Exxon. That's another good one. Back in October of 2020, shares of Exxon were cratering down to, I think they bottomed at like $34 or something. And um, I look at those assets, and what I ask myself is, in 5 years, will this still be valuable? In 5 years, will people still want this? In 5 years, do I think this will still exist? Will a company like Boeing still exist in 5 years? Yeah. Will a company like Exxon still exist in 5 years? Oh, yeah. Um, will reserve list cards still be desirable in 5 years? Yeah. And so it's really helped me to get past that psychological block of seeing that the price of something has dropped and then treating the asset negatively and feeling like I shouldn't buy it. And so think on the longer term. Don't think for, the previous 3 months over which an asset has dropped. Think over the next 5 or 10 or 20 years that you're going to hold an asset and think, what do I think it's going to do then? Because once you start zooming out to 3 or 5 or more years, it really doesn't matter what fine price you bought at. If you bought Exxon stock in 2020 and you paid the bottom price of something like $35, $36, or you paid 40, or you paid 42, or you paid 45, you don't really care today because it's what, $55, $60 somewhere in there today. And so you're not too worried, and probably in 5 years it'll be 70 or 80 or $90. And so think on the longer term. And there's so much negativity if you start reading the comments sections on investing websites, on MTG Finance Reddit, stuff like that. There's so much negativity, and once in a while you'll find a rare diamond in the rough in those kind of places for investment advice, but more often than not, it's just a bunch of unnecessary negativity that will probably dissuade you from making what would have turned out to be a really good investment. So think for yourself. Remember that price should not drive sentiment. The sentiment towards a company, what their fundamental position is, what the real value and scarcity of a collectible is, those things should drive the price, not the short-term noise. So if you like this kind of thing, like, comment, share, and subscribe. Join me on Final Trade. I'd love to have you have these little talks and discuss investing, TCG investing, all kinds of general economic topics. I love Magic the Gathering, Flesh and Blood, a little bit of D&D, 5th edition once in a while. I'm mostly into vintage Magic cards, what might be called pre-modern era. So if you like any of those things, join me and leave a comment. I'd love to hear what you have to say. Thanks a lot.